Like a number of the major currency pairs this week, the New Zealand versus US dollar had an up and down trading week. If we look at the end of last week, we were sort of right at a key neutral level. This week we moved up below it and then back above it and then back below it. I'll talk about the technicals that are driving this currency pair as we head into the new trading week, so let's get started. Looking at the 4-hour chart, you see this dashed line. This dashed line represents the start and end of a week, and so this was the closing level of last week. And as you can see, last week the moving averages, the 100-day moving average and the 100-bar moving average on the 4-hour chart were near converged, and that's where the price went out. So we were looking for either a move to the downside or a move to the upside in trading. We got both. The initial move was to the downside. That pushed the price out down toward this swing level right through here. That would have been a target on the downside. We fell short of that, rotated back to the upside. We tried a little bit on the upside. In this case, we moved above the 100-day moving average and also the 200-bar moving average on the 4-hour chart. And similar to what we saw on the break below the 100-bar moving averages, the price failed not once but twice, and we rotated back to the downside. Now, as we head into the weekend, with the prices obviously below this cluster of moving averages, including the 100-day moving average, the 200-bar moving average on the 4-hour chart, and the 100-bar moving average on the 4-hour chart. And this area right here is going to be the risk level on the top side, or the bias defining level. As long as the price remains below that level, the bias remains more to the downside, and we can expect that we rotate further to the downside over time, because markets don't stay in one place for long. And so we would expect to move below this level right here. We expect to move toward this lows right here, 38.2% retracement of this move to the upside right through here. And then look at this swing level right here, which would define a swing area from here, and here. So those would be the next key targets on the downside for the New Zealand versus US dollar. Now, conversely, if the price were to move above these moving averages, then it opens up the door for further upside momentum. We'd have to stay above the 100-day moving average, 200-bar moving average, and then we'd start to look toward this swing area right through here, or the swing high right here, maybe the high price that we saw in the month of July, and then go toward the high prices through here, which formed a ceiling through here. We did try to break above that ceiling, only to fail at 61.19. That was the high price for the year, and would be a target on further upside momentum if we were able to get things going trading next week. So right now the bias remains more to the downside with the price below the cluster of moving averages. We'll see if that momentum continues in trading next week. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.